company insurance, I guess, to protect the directors and owners of the business.
Definitely.
Good stuff. So how long, give us a bit of background on you, Charlie, and EIC, if you would, just to position it for everybody.
Yeah, so as a company, later this year we'll be celebrating our 50th anniversary.
Wow.
So quite in this day and age, 50 years is quite a spectacular number. I haven't had loads of Botox. I haven't been with the company for 50 years. I've been with them. It'll be 14 years in March. Although I've got members of the team that have been there 20, 25 years. So they've seen us journey from Hemel Hempstead over towards Tring, and I've been MD now for 5.5 years. I did a management buyout in 2017. So.
Very good. So in that time, you've seen lots of changes. I can only assume in the insurance landscape and everything else that's going on. And clearly, the last couple of years have been a bit challenging for everybody. But let's just start, if we could, with if I start a new business, I come and knock on your door, Charlie. What's the single most important insurance policy as a director of a company that I should be looking to take out?
I've got two answers to that. So as usual, an insurance person not coming back with a straight answer. The two answers would be whatever you're legally required to have, because there are some legally required insurances. So employing people, if you have employees, you legally must have employer's liability cover. A misconception is that if someone says, "Oh, they're a labour-only subcontractor, I don't need to have employer's liability." If they're wearing your polos and they're driving your vans, they're classed as an employee in the eyes of the law, even if they're not classed as an employee from a payroll point of view. So my advice is just be upfront and honest. What you don't want is someone getting injured on site and finding out that you then have an inspection from the HSE as a result of it, because I think it's £5,000 a day fine for not having the cover. So
wow. Okay. So contractors, temp workers, anybody, as you say, is wearing your polos or driving your vans, I think that's a great description, must be covered by your employer's liability. Okay, great stuff.
I would say the legal one. And as a director, I've kind of done a bit of a talk on this before, and that's why I was very interested in talking about this. It's a common misconception that people take a limited company out and they think, I've limited my liability, it's all on the company now, nothing's going to fall back on me. As a director, I'm scot-free if something goes wrong, and that's really not the case. There's countless scenarios and examples of when a director or an officer or a principal is liable.
Okay. So some kind of cover to cover you for what, misrepresentation or not performing your duties properly.
Your duties, errors, because we're all humans. We all make mistakes. It could be errors in a workplace that involve employees, where unfair dismissal is quite a common one that we see. Unfortunately, the harassments and the discrimination side of things as well. A fact that it is an absolute fact that we might not be in a recession according to the BBC, but I think we all sort of figure that we are. Inflation is running quite high at the moment, and that doesn't mean it's bad news being in a recession, and I'm an advocate of that. But one fact is that as soon as we enter a recession, insurance claims go through the roof, and people are more likely to claim during a recession than ever before. You're looking at over 70% increase in claims during a recessionary period. So unfortunately, though, it seems when people are making cutbacks is ironically at the time when claims actually happen more often, and people are more likely to go, do you know what, I will put that through insurance rather than self-insure and cover the cost myself. So it's quite an important time.
Yeah, absolutely. So is there a kind of a de facto standard list that if I'm starting a new business, I should go for employees liability, obviously? So the one you've just mentioned is directors and officers insurance, I guess?
Yeah, directors and officers. It's got a different, as usual, it started to get a good name. So the market decided to change the name of it. So it's now called a management liability package, but it is directors and officers liability. And what it means by that is it doesn't just cover the directors, you can also cover the company for the similar levels of cover that the directors would be. As well as any employment disputes. So It's like an enhanced legal expenses is probably the best way to put it, with elements of it. The main difference between the two, legal expenses, you only have a valid claim if there is a probability of more than 50% from the insurers that you will win. Under this, you can have 1% and they'll still represent you.
Right. Interesting. Okay, so in your vast experience, what are the biggest mistakes that directors make other than not taking out that particular insurance?
Probably taking advice from, I call it the bloke down the pub. Coming in with a view of what they think they need because someone else has got it. Everyone's circumstances are individual. Everyone's budget is individual. At the end of the day, he's going in with a kind of a mind of, this is what I do, this is what I want to be protected for, this is what I'm comfortable mitigating. Because at the end of the day, you can insure everything, but we can't afford to insure everything because it will get to a point that you won't have any money left, and it won't make certain people happy. But you've got to go in with an attitude of, what do I need, and actually have that, let's go through what I need, as opposed to I want this because someone's told me to have it. We see it quite a lot when people are signing contracts and they've been told they need certain levels of insurance that they need to take out. Little known fact, you can challenge them quite a lot, because a lot of the time they put numbers on there and they put levels on there which are unrealistic for a startup business to take out. Common one is professional indemnity, 5 million. That's going to cost a fortune depending on the business, and you generally don't need it. But it's about challenging, and that's what we do. We don't necessarily say, if you insist on it, we'll quote on it. But in my advice, I would challenge them on this, and I'd look for a lower cover, for your own benefit more than anything, because we don't want people to pay more than they should do.
Absolutely. So you cover, startups all the way through to large organisations. Obviously, lots of different types of insurance in there. I guess, what's the landscape changed from to in the last 14 years that you've been in the business? What's the biggest difference that you see?
The biggest difference is electronic trading. It's been the biggest difference in our sector. When I started, we still had cover notebooks in a lock safe. So when someone had a temporary vehicle that they were adding on, we'd still have to write the cover notes out. And when you got that phone call on a Friday afternoon at 4 o'clock, because you had 3 people wanting a temporary cover, your heart sinks, because you know that you're going to be writing that out. And if you make one error on it, you've got to scratch it out, start again. That's the big change. Is a lot of it now is there's a lot of AI that's used in it. There's a lot of flood mapping that wasn't there before. So when it comes to the speed of getting quotations, it's a lot quicker than it used to be. We used to get a quote on a Monday. You'd be delighted if you could get something out by Friday. A lot of the time we're getting an inquiry on a Monday and the client wants it by Monday afternoon. And that's what the technology that's come into the sector, albeit not as quick as we'd like, it's got a lot better. And the speed of doing things for SMEs in particular is growing, definitely.
Wow. That's really interesting, isn't it? I never thought about that. But having just gone through the process of buying a house, you could do with that technology in the legal sector for purchasing a house, couldn't you?
It will come eventually. It will come. I didn't realise they have this technology now in the legal sector, which the insurance sector has as well, where they can actually compare the change. Say you've got an original contract, and then they come back with amendments. They can actually run it through the software to actually see what the amendments are, as opposed to sitting there and reading the whole documentation. Insurers have got a similar thing as well that they do with their policy wordings.
Yeah, very good. Technology supports us all.
It's coming.
Definitely,
Absolutely.
Definitely. Good. So that's one significant change is speed. What else have you seen?
I think in a way the personal side of it has disappeared quite a lot. I mean, an insurance broker used to be the type of thing you'd go down a high street and see. It'd be a bit like you'd walk down and you'd see your local accountant, your bank. I mean, Simon, look down Tring High Street. That says everything that you need to know. You look for you would see your local bank manager, you see your insurance broker, your accountant, your solicitor, all the what I would call the generic grey suits that you would see out and about quite regularly. There's a lot of acquisition in our industry, a hell of a lot. and a lot of consolidation. And what that's ended up doing is having regional hubs where the local sort of towns like this and in Dacorum and Hertfordshire sort of get missed off. So they will then be treated. So, for example, in Tring now, there isn't another insurance broker. There used to be 3. There's now us. Not too disappointed about that. And then you go into Hemel, and it's got a couple of regional hubs in Hemel, for example, and 1 or 2 micro insurance brokers. So that kind of your local independent brokerage that started to die out, and that's unfortunately that's the detriment of clients, because you're losing out on the personal service, that going to see people face to face, actually seeing what a premises is, seeing what the risks are in there, and actually being able to help. Because I think that's the bit of our industry that is the most important bit. It's all well and good saying we can do it cheaper, but you don't buy insurance because you want it cheap. You buy insurance because you want to be covered. And I think that's a bit of re-education, especially after COVID, that we're trying to do, which is to actually get back out and see clients and actually say to them, no, it's good us coming out to see you. Yeah, Zoom's great and it's got a place, and I totally agree. But that face-to-face element is so crucial still in our industry.
Yeah, that's a really good point, isn't it? Because it's not a commodity insurance policy like, insuring your car. You can sit on the internet at 11 o'clock at night and go and find the cheapest policy for a car, which is a standard product, and therefore it's really easy. But every business is completely individual, isn't it? So unless you've 100%. Seen the premises and spoken to the people and understood what their challenges are, then that's a bit more difficult.
Definitely. No, I totally agree. It's it's an individualistic thing, isn't it?
Yeah, absolutely. Okay, so significant changes, I guess, in both of those areas there. Anything else which kind of springs to mind? I guess one of my questions probably is the breadth of insurance you can get now, because you used to be able to buy, I'm making this up, 6 policies. You can now buy 66 policies. There are so many other things. Is that a significant change? Has that helped or hindered the business owner?
It's helped, because you used to have just almost like fire policies you used to have. So when you insured a property, you'd insure the property for fire, you'd insure it for theft, accidental damage, and these things wouldn't necessarily all be under one policy. You would buy in the levels of cover that you wanted. That's unheard of now. If you insure a property, I don't know about you, but I would expect all that cover to be in one place. I wouldn't expect to have several policies to cover it. That started to come in when I sort of came into the sector in the industry. The kind of the package policies, as they're called. So commercial combined, office, shops, tradesmen, they're almost like a package that puts these things together in one. Doesn't mean it's not individualistic. It just means that it's in one place, and it can make it more cost effective, because trying to buy loads of policies from loads of insurers, they'll have minimum premiums, and all of a sudden you're paying absolutely through the roof. And if anyone goes through Lloyd's, for example, if they've got a tricky risk and they need to go into Lloyd's, you're looking at £2,500 before an underwriter will look at it. Whereas a package policy, our cheapest one that we do is about 70 quid a year. You just wouldn't be able to get that in front of a Lloyd's underwriter. They'd say, keep moving, if you try to go to them for it. So I think the kind of bringing, again, technologies help this, because they've been able to rate all these things together, but packaging things up while still being able to make it individual has made quite a big difference to our sector and clients as well. It makes it simpler, so they've got one invoice, one bill, one policy, not loads of policy numbers. It does make life simpler, definitely.
Yeah, it's a really good point, isn't it? So, and can you extend that? So we've got a few clients that have a fleet of vans out on the road. So you've got a manufacturing plant, you've got a group of people inside, so employees' liability, you've got vans out on the road. So can you buy an insurance policy which wraps everything together?
You can do.
It's your job, I guess, isn't it, as a broker?
Yeah, you can do. It doesn't necessarily mean it, when it comes to different type, when it's like vehicles and property, what we sometimes do, there are insurers that will do them all in one, and we've actually got clients that do that. There's sometimes it works out that they might be really good on the premises and the staff and the contents, but not very good on the vehicles. So we'll make a judgment call. That's our job at the end of the day. That's what we get paid our commission to do, is to make sure that you're not, it might well and good be easier for us and the underwriter if it's all in one place. But if someone's paying £5,000 more than they should be, then we won't do it with them. That's not, we kind of abide by something called treating customers fairly. So it's not a case of when you hear, oh, they're putting it with the people that they earn the most commission off, which is a saying I've heard many times over the years. We can't. I will get shut down. I literally, the FCA will march me to prison if I do that. So we just cannot do that. We've got to do it by treating customers fairly. So
going direct to an insurance company is not necessarily the best way these days. The best way actually is to go to your broker and get a custom set of policies that they coordinate in order to keep you out of jail.
The funny thing is that if you go direct to an insurance company to do it, our rates will be the same as if you go to direct to an insurer, because there's something called dual pricing that's been brought in, which basically means that you can't get a different rate for being. You used to see it all the time where it's, oh, you're a new customer, you can get a new customer discount, but because you're a renewing customer, you've got no chance and you'll just get price hiked. Law has come in to change that. Now we still have to kick the insurers' asses occasionally to remind them of this. When we say, well, I've got a new business rate of X and you're quoting that, so you're going to have to match it. And they do, in all fairness. They do when unfortunately, you're having to call them out a bit on it at the moment. But that is coming into the sector because it's not fair. It's not fair that loyalty isn't being rewarded as much as new clients. Because at the end of the day, simple maths, you would say this to any of your clients: having a client renew and be loyal to you is a damn sight cheaper than going out and winning a new client. The acquisition cost of bringing someone on board is so much more expensive. So the mindset behind that had to change, and I'm glad it is.
Yeah. The best customer you'll ever have is the one you've already got.
100%.
Is that true in the consumer sector as well, Charlie? Because that's the place where we see it every day, right? So, my car insurance renewal comes up and it's suddenly £200 more than it was last year. I go straight back on the internet and I can get it for £50 less than it was last year. But I have to switch insurance companies. That's insane.
It is bizarre. And a lot of the time what you find out is that it's the same insurer, but with a different name on it. So a favourite of this one, I don't mind bad mouthing them because I'm insured with them at the moment. So is Admiral. Admiral, basically, if you go on price comparison sites, I think 2/3 of them are actually Admiral. So Elephant and a few of the other ones that come up on there are actually the same company. If you look at underneath it all and see where their FCA license is, it's the same people. It's bizarre. Bell is another one I think they've got as well. It's bizarre. I cannot understand the logic behind that, where you can have basically a paper thin wall and someone the other side of the wall is going to charge a different rate. It's why we don't do it. It's why we do not do private car. There is no logic behind the mindset of rating on it. There are private car brokers out there that will do that work for you and get rid of the nonsense of it, but it is a bit of a race to the bottom at times, depending on the type of car insurance you're after. It is kind of looking at how cheap can you do it, as opposed to how can I make sure I'm covered if something happens. And that's what I would say. If you are doing price comparison, please read everything. And if you're not comfortable with it, get someone to read it for you, just to make sure that you're not signing up for something that's too good to be true.
Yeah. Got it. Okay, so what else? What other advice have you got for business owners, Charlie?
I would look at things well in advance. Don't treat it like an invoice and just think, oh God, that's coming up, I won't look at it. No changes. That's one we've heard quite a bit this year in the last sort of 6 months. Is no changes. Despite the fact that buying in their stock is costing them 60% more than it was previously. Their turnover's gone up to reflect that. An example, admittedly, it's a larger client, but this is an example of a client whose sales numbers are exactly the same. Their stock count is exactly the same. Their turnover went from 8 million to 14 in 1 year. Their profit, they're more, because what they've done is they've obviously made the profit margin the same, so they're making more money. But it's an example that actually just saying nothing's changed. There are no changes. We're about the same as last year. you're probably not. Probably one thing to keep an eye out on is the rebuild value of your houses and commercial premises if you've got buy-to-let properties or what have you. Aviva released a statement at the end of last year that from, I think it's March, their index linking rate, so the rate of which they think properties will cost more to rebuild, and that includes designing costs and everything, is increasing to 17% per year. Wow. So just bear in mind, if you're budgeting and looking at what your costs are going to do, your house insurance, without any rate increase at all for the building, will go up about 17% this year, because it costs 17% more to build it. It's no other reason for that. So if you haven't got an index linked policy and you haven't looked at the sum insured for a number of years, I would start looking. You can get a rebuild cost assessment done for about 200 quid. You don't necessarily need to go to a chartered surveyor to get it done now. And it's worth its weight in gold, because last thing you want is a disaster, Simon, and especially your family home. You don't want a situation where you're then going, I've only insured it for 80% of what it should be. They're only going to pay 80% of the claim. You really don't want that situation to happen.
Wow. Yeah, really good point. Really good point. Yeah, I've seen that in the car sector quite a lot. My car cost me 15 grand, but it gets written off and I get 12 back from the insurer.
Yeah.
That's insurance, I think, used to be the thing they used to sell you, didn't they?
Gap insurance, do you know what? And there we go. But another advice for you. If you buy gap insurance from the leasing company, or when you go to Audi or BMW or whoever, or VW, whoever you go to, and you put it on your monthly payments, you'll pay interest on that as well as VAT, because you're being sold to by a company that charges you they have to charge you VAT, and they'll put their margin on it. We quoted against one recently. They were quoted about 560 quid. Because we don't charge VAT, we don't charge interest, and it's a one-off payment. We were 270 quid for the 3 years. So if you do look at purchasing, I'd speak to a broker, because you'd be surprised. They'll be a lot cheaper than going and get it at the garage, and you'll have the reassurance that it's someone that's selling you insurance, as opposed to a car salesman selling you insurance, or saleswoman, sorry, selling you, which salesperson, that's the word. Really good point. Again, never thought about that. And you're right, I've got a client in the property sector, so house prices on average to build gone up by over 15% in the last 12 months. So you're absolutely bang on. Okay, what else is on your list of things to be wary of and watch out for this year? Some positive news. Insurance person saying positive. All you probably heard is hard market for probably the best part since end of 2019, 2020, sort of around the COVID period. The hard market sort of kicked in. In America, it started to ease, which is normally a good sign. Normally when America eases off and leaves a hard market, like economics and everything else, we're normally about 9 months behind. So we can see that in America, it's starting to level out and ease off of how much premiums are going up by. So the price hikes that people have seen over the last few years, you'll start to see that ease and actually soften over the next couple of years. And a soft market is a good thing for consumers, because it means that's when the fabled rate starting to come down actually starts to come into action. So obviously, if your turnover grows, your rate doesn't go down. That's not how economics works. But if your business is the same as it was, say, during COVID and what it is, you'll start to notice, because professional services, I know everyone's shedding a tear for, were the ones that got hit the most during COVID with cost price increases, and building contractors. They're the ones that we're starting to see the market become more competitive in than where they were a few years back. That's probably the one to look out for, is maybe later this year, as we start to see an upturn in the economy, the market will start to soften, which will be a good thing, and it is much needed.
Yeah, and as you say, following the US, it's always a shame we seem to follow the US. They should follow us for a change, shouldn't they? Really, but nice. But 9 to 12 months later, you're absolutely right. There's a pattern there, isn't there? So good. Anything else to watch out for?
I think the other thing I've sort of mentioned about litigation and claims and things going up. I do think we kind of heard this fabled GDPR changes and everything that came in that might be. I can't keep up with the legislation if it's going to be kicked out or stick around these days. But also with other regulatory bodies like furlough being looked into, these regulators are. If anyone is hiring at the moment and seemingly getting them on board, it is regulators and people investigating. So that's investigating what your furlough claims were, whether you've had bounce back loans and the reasons that you've used them for, and tax investigations in general, because as we probably all know, the government is potless. And if they can, in some way, the Treasury get some of that money back, they will. If you haven't got with your accountant tax investigation cover, which a lot of accountants offer as standard, I would implore you to speak to your accountant about it. And if they don't offer it, speak to an insurance broker because they can offer it as well. And make sure that you're protected and covered, because I think you'll find there'll be a lot more companies that they have the resources now where they're going to start investigating. Allegedly, HMRC are going to get themselves up to date at some point this year. Which I'm looking forward to. I've only been waiting about 11 months.
All that free money that came out during COVID turns out is not necessarily free if you've misbehaved.
Exactly, and if anyone has had bounce back loans and they've extended payments or just been paying interest only, that ends in kind of Q1, Q2. So there will be investigations. There will be people kind of looking into, well, if you're defaulting now, what have you spent the money on? What have you done? All I would say is be prepared for that. If you are in a sticky, tricky situation, speak to people that know what they're talking about. Don't bury your head in the sand. Speak to Simon. He'll point you in the right direction of where to go.
Very good, Charlie. That's been an education. I know you have prepared some slides for this morning, which we haven't used. But are you happy for us to share those with the attendees?
Absolutely. Yeah, got no problem at all with that. That's absolutely fine.
No Super. Problem. So no questions currently. Inevitably, what happens is I'll get an email over the next 2 hours asking all the questions. I'll share those with you, of course. But if you'd be kind enough to send me the presentation over, it's been a pleasure talking to you, Charlie. And I look forward to catching up with you again soon.
Look forward to it. Thanks very much. Thank you for the opportunity.
Thoroughly enjoyed that. Take care.
Thanks.
Thanks, Charlie.